How you doing, friends? This is Coach Ernie here, and this is the Zero DTE morning market analysis, where we look at all tail risk events and how the market is affecting them. And so every morning I do a morning market analysis looking at the macro, political, financial goings on and see whether or not there are opportunities. Well, right now, I'd say that the opportunities are kind of like on hold. We're in this kind of compression, but there have been other things that have been bothering me. That doesn't bother me at all. It's actually a great time for a tail risk trader because that gives us seeds to plant, and those seeds are relatively cheap. But here's what's really going on, and it really has more to do with the Fed and the unspoken word. Everyone watches the Fed, listens to the language, the pressers, the dot plot. But what most people aren't saying is the part that actually is obvious. If you step back, the Fed can't normalize rates. This is like their primary goal, right? Not really. The whole system isn't built for it. The U.S. is sitting on over $34 trillion in debt. So every time they hike, they're adding billions in interest payments. And that's not sustainable. They're tightening with one hand and indirectly funding the debt with the other. They are the enablers. It's circular, and they know it. We all know it. But no one in the mainstream is going to say it directly. The other thing is, officially, the Fed has two mandates. Stable prices and full employment. But behind the scenes, there's a third, and that is don't break the market. Because if stocks collapse over the credit lockups, it's game over. And it's not about inflation at that point. It's about keeping the machine from seizing up. So these hikes, they're more about appearances, showing they're doing something. It's not about crushing inflation. It's about preserving credibility, keeping the narrative intact. But here's the danger. The system can't really handle 4 to 5% rates for too long. The entire structure, pensions, private equity, zombie companies, it's all built on low rates. Even this so-called normal is quietly doing damage under the surface. And when people stop believing the Fed has control, that's when things move. Not gradually, but fast. It's like a convexity, right? That's the convexity moment. And that's when vol doesn't just rise, it rips. So what do? We stop trying to be right. We stop reacting to headlines. We get positions, small, asymmetric, optional. Let the tension do the work. Because when the bluff breaks, it's the traders who saw it coming. Not the ones who tried to predict it. But those are the ones that get paid. The guys who prepare in advance. Like I said, this lull that we have right now, it's a perfect opportunity for us to start planting the seeds. Right? And so that kind of leads me into today's report. And that is that the market is coiling at the edge of a structuralist shelf. Oh, that's hard to say. A structuralist shelf. Who the hell wrote that? You? The VIX is at, what the hell? VIX whispers tension at 70. What is this, a poetry contest? I move on. The VIX is at 17. That's the bottom line. It's sitting there right at the edge of zombie land. And the CPI is the spark, or could be the spark, but the real fire might come from the reaction. Welcome to compression before the storm. That's what I've been saying. That's supposed to be the hook. Someone else has got to be writing those hooks. Is that you? So today is not about the number. It's about what the number fails to move. The VIX sitting at 17, a little above 17, hovering at the edge of zombie land, just shy of Goldilocks. That's the compression regime. Quiet, but not silent. The kind of quiet that implies coiled uncertainty. This is really getting to be a monotonous story over these past several days. But ES futures float atop a thin volume shelf. the third stair in the Stairway to Heaven. You'll see my chart. I have the 3 stairs to Stairway to Heaven before we get to all-time highs. There's no strong memory beneath. If CPI is hot, that shelf collapses fast. If it's cool, bulls have room, but no structure. So we're sitting up here, and we're trying to go higher, but there's no footing that we can grab a hold of, and so we can get a good push. So tail risk trades don't require prediction, they require positioning. Today is a Sigma drift day. That's one of our strategies in our tail risk lineup, and typically placing out of the money positions 5 to 10 days out. And that's the plan for now. Anyways, that's where I think the big opportunity is. So that trap is assuming a CPI matters. The truth is, how markets react to CPI, that matters more. Now, oil has been quietly bullish on inventory drawdowns, and credit. Let me tell you what's happening here, just so you know behind the scenes. I write all this up beforehand, put it on a teleprompter. It is voice activated, and it scrolls on me talking. Every once in a while, it gets like, can't move. So I have to push it. But yeah, that is true, though, that oil has been quietly moving up. Credit spreads are widening under the hood. The Fed is silent, but the bond market is not. Stillness is a lie. Markets tell before they move. Oh, I like that quote. All right, you're redeemed. That was a good quote. I'll say it again. Stillness is a lie. Markets tell before they move. Yeah, that's pretty good. Today's question isn't what's the number, it's what's the reaction function. Trade the response, not the forecast. That was weak in the end. All right. Again, same old story. We're coiling. Volatility continues to drop. We're moving sideways with a slight grind up. Why is oil, getting some fire under it? Is it really? Nah, not really. That was a weak story, but it is. I mean, just a little bit. If you really pull this all out over May, it has gone from a low of 56. Now it's 66. So what the hell's going on there? I don't know. So what we're going to do is take a look at the full report. I don't know where this is going to go when I click on this. That's not where I want it to go. I want it to go to there. Yes. All right, so we can see VIX is at 17, teetering on the edge of Goldilocks and Zombieland. It will eventually, I believe, get into Zombieland. However, this coil is going to snap at some point. So we're still sitting at 20 to 30 wide. Our big-ass fly is way the hell up there. It's, not worth trading, but it's indicating that we should be looking at narrower flies. So on the 20 side to 25 side rather than 30. We are definitely riding this moving average. That's no real breakout from the moving average. So that's a little bit worrisome. We are, and we'll see the volume structure to see where we're at there. Here we are again, just kind of slowly grinding up. Usually overnight, we do the grind up overnight, and then we just sort of sit in stasis during the day. So you can see that here, overnight, then another overnight push, and then another overnight push. We're a little higher, and then we'll see what happens. Those are tough markets to trade, by the way. I mean, if you have all overnight movement and you're a day trader, what are you going to do? There's not much to do during the day. It just sort of hangs out. So that's why these multi-day tail risk trades are so important. So here we go. We got off the top knot node and Stairway to Heaven step 1, slipped off of it, came back up, climbed up over it. Now we're on stairway number 2 going into this low liquidity zone. And that's going to provide a little bit of resistance because right here is the edge of Stairway to Heaven. That line right there, I don't know that that's really the line. I would say that is more likely the line. That is definitely a crevice in the volume well, and that's going to provide some level of resistance. But there should be one like right there, and that should be a green line. So let's do that. Let's oh. That's not what I wanted to do. We're going to take this green line and we're going to put it right up here at the bottom of this node right there. And then this line right here should be red, signifying the top of the node. Like that. And we'll make that 3px. All right. So there's the third step right there. So you see I have the nodes outlined in green and red. Bottom is green, top is red. So we're just about coming up to there's going to be strong resistance at this deep crevice at 68.58 on the ES. If we can get by that, then we have a chance of the top knot node today. So slow grind away, right? But what is really happening underneath? Is this all just kind of fairy dust or froth? I think it's more than froth. I mean, there's some definite footholds that we're taking here. Otherwise, I wouldn't have called it the 3 steps or Stairway to Heaven. All right? But once we get up here and break out, man, woo, well, we'll see what happens. It may be a repeat of what happened back here in late 2024, early 2025. We shall see. But, yeah. So you got it all today. You get like a Fed rant. You get a market analysis. Boy, you guys are lucky. Despite you. Anyways, thank you very much for showing up today. This hump day, I think, may be pivotal. I mean, we do have some economic reports coming up. I didn't even check those. Why didn't I do that? I did mention the CPI, right? So at 8:30, so that's big. That is big stuff there. Although the Fed is kind of locking down in terms of their idea of doing any rate cuts. They keep on solidifying the narrative across all of the Fed governors that no rate cuts. We are. When they do that and they make that, digging their heels in and stuff, I think that they're positioning for doing an actual rate cut. It's just, whenever there is, it's kind of like Sun Tzu, you feign doing one thing and then do another. So that's what I think. Yeah. All right. That's all I've got to say. Thank you all very much. Hey, if you want to learn more about tail risk trading, go down below, click on the link, the Skool community, Fat Tail. All right. There's also a fantastic AI that I developed that will actually make you smarter. Now, I'm totally serious about this. The AI that I developed will actually make you smarter. Well, that's it. Thank you very much. Have a good one. See you tomorrow. Coach Ernie out.